It's May 1st. It's no microphone. It's May 1st. Um, okay. I think it's a Tuesday. It's May 1st. It's a Tuesday. And I'll take you through the account real quick, show you what's going on. I am sitting at an all-time new high, even though it might be just for a moment. Tomorrow morning, it might be a different story. And then we're going to talk about, I will talk about how big companies are safer to invest in now than ever. This is the vlog that takes 30,000 to a million. It's going to happen. It's going to happen. So we're going to go into the browser right now, and I'll show you the account and what's been happening. This is the weekly chart. You can see it looks very fat. The look at the monthly chart. It's so flat, super flat. But right now, I'm actually at an all-time record. It's $57,602.95. Now the chart looks weird like this because 12 o'clock just turned, and the Robinhood website resets its visual. This is the weekly chart. You can see this real big bump here, late day. This will turn against me tomorrow morning as the option for Apple kicks in. I sold an option call for $212.50, and it's scheduled to sell on May 3rd. So it could happen. This is the Apple chart today, and the reason why the account has gained so much cash in the last, or so much value in the last after hour trading today, excuse me. Apple jumped from 200 all the way over to 210. Yes, I have the hiccups, and no, I'm not redoing this video. So it jumped by 10 bucks. Why? Because the earnings call came out and I listened to it, and it just sounded like Tim Cook was very upbeat and positive about all the developments that have been happening. He said that the sales in China were very weak only in December and November, and his worries are starting to subside now as demand is picking up, since they lowered the prices over there and they're selling him cheaper in China, and there's a bunch of other financial acrobatics that they did to try to incentivize people to buy iPhones. So it was a nice healthy jump. Unfortunately, like I said, this option right here is not going to be trading at $94. It's probably going to be trading like $300, $400 tomorrow. So these gains are very short-lived. We'll see though if Apple drops a little bit and does not reach 2012 and 50 cents by the 3rd, then I'm good. It is not, oh man, I messed up. It's not a Tuesday. It's actually Wednesday morning, really early. It's 12:45 a.m. right now. Any other changes? EXK is just chugging along. I've talked about this company before. I mentioned how I'm scaling into the company now as it's going down. My first buying point was $2.10, which was over here somewhere, and I bought 200 shares, and I was looking to buy more as it keeps slipping down, but it looks like it's stopped slipping for the moment, and it's steadily rising again. I was anticipating a little bit more of a downturn and try to accumulate some more shares, but it looks like it's found support for the time being. So I'm just waiting. I still have 600 shares that I would love to unload at around $3. So if that happens, great. Any other active movers here in the account? Not really. We have Wheaton Precious Metals with a $17 gain. Energy Fuels with a loss of $18, and that's about it. It's very, very steady. The S&P 500 index, or the SPY, which represents it, the Exchanges Traded Fund that represents it, was only up 0.05%. Very, very modest gain. The market is kind of at a standstill at the moment, except very few companies making, their own big moves like Apple. for example. If we want to make a brief look, if you want to take a brief look into the account, this is what it looks like now. Oh, it says I'm using margin. I don't know why. I thought I got rid of it. Anyway, so this is the account. Biggest equity holdings by equity. We got Apple, the Uranium Business ETF, Emerging Markets Dividend Fund, Russia ETF, C-SPAN, Wheat and Precious Metals, Emerging Market Bonds, Chemical, and then short-term duration treasuries, US bonds. So this is it. This is the account. That's what's been happening. I'm just waiting on this Apple call. It's got me nervous. You know, I'm only $2 away from the $2012 mark, so we'll see what happens with that. And for today, I want to just discuss one little topic, how I think that investing in big companies right now is the safest it's ever been. And I think that if you're starting in the market right now, if you're just got like Robinhood, oh, I keep kicking the desk. If you got, Robinhood and or some platform looking to invest in things like that, the biggest temptations are going to be to participate in penny stocks, in small valuation stocks, or some, really risky plays that don't actually pay out. It's very lucky if you get a small company to actually pay out. You're better off investing in a big company. There was some kind of statistic I read today that 80% of the big companies are profitable while only 50% of the small companies are profitable. And the big companies get all the attention, all the liquidity, and all the financing. So it's just such a better investment to buy a large company than a small company. But that's not the only reason. That's not the only reason why they're safer. Today, there are less stocks than ever. Well, since 1997 is when the amount of stocks in the market peaked out. And ever since then, there's been huge yearly cannibalization of stocks by other stocks. It's kind of like Slither, Slither.io, that website. You just keep swallowing other companies and become huge, behemoths holding many other little companies. And even Apple's gotten into that game. Usually they're not ones to buy other companies, but they've gotten into the game of buying other companies. Google has been a serial offender, and Facebook has notoriously bought tons of companies, even at big valuations. So another reason why I think it's pretty safe to buy big companies now, especially profitable ones, is because of this merger and acquisitions. All these buyouts, they've become kind of like their own indexes of their industry. So, for example, if you want, instead of buying an ETF of search engines, you can just buy Google, because Google owns all of basically the majority of search engine companies out there, anything that's related to that. They've also bought a ton of other companies, but why don't you, if you want a company like that and you want to buy an index, you don't need to. You can just buy that one company, right? If you want to buy an index in social media, well, you know what to buy. You buy the Zuckerberg index, right? He's got Facebook, Instagram and WhatsApp and all these other big companies too, and plus a bunch of little ones, and he even buys things like Oculus Rift and all kinds of crazy stuff. So, and those are just some names. I mean, they have a huge list. As soon as somebody comes up with an idea that they like, they just swallow them right away, give them a big paycheck, bring them into the Facebook or Google or Apple or whatever, an environment, and they just grow the company. Just like the big snake. So you don't need to buy a bunch of companies to create safety through numbers like what was the case before, and one of the reasons why ETFs are so popular because of that diversification. Now, if you want to buy an index that's well diversified, you just buy the big company. Not only that, but you don't even have to pay fees. So I read another article that mentioned how the companies, the number of companies has reduced to such a crazy amount that there are now more ETFs, exchange traded funds, than actual stocks that comprise those ETFs, which is pretty funny, you know. Um, that's like, going grocery shopping and having more bags to put groceries in than groceries. It's kind of a interesting thing to interesting thing to think about. Anyway, English is a second language. So that's kind of my current thought for today. Big companies. So if you're starting out, don't get lured in by the promises of super risky trades. Buy the big companies for now until you learn what's going on, and let them ride for a while you're studying or reading books about investing and trying to figure out what's good and what's bad, how to make the most out of your time in the market, and so forth. All right. That's just kind of my thought. Nothing really super educational today except some fun facts and a little recommendation from a retail investor just like you. I'm not a professional advisor or anything like that, so take everything I say with a grain of salt. Make sure you consult, a actual professional investment advisor, financial advisor, if you're looking for, legally protected advice. Don't sue me. All right. So I think that's about it. Just my thoughts. Hope y'all are getting to 1 million just like I am, at least with this account. I'm looking for it to draw. I'm kind of a little bit of a stall out right now because I was anticipating a downward market turn, but it just hasn't happened. Let's go. I'll show you what I'm talking about here. If we pull up the SPY, a lot of people, including myself, have been anticipating a little downturn here because this has been such an aggressive uptick here, if you want to call it an uptick. And there's rarely a triple top. Like there's double tops, but triple tops are very, very rare. So the chances of this breaking on the upside are extremely high. So even if there's a little correction, it's gonna go up for the most part. I mean, don't quote me on that. But I always ride a little bit of a bullish position, like at least 55% bullish stance. Right now, I probably have, I want to say 85% bullish with my allocation, but I have a lot of garbage here that's like, international, I don't want to say garbage, but ill liquidated funds, a lot of international stocks, and, I got the Russian market, emerging markets, like mining stocks, things like that are pretty, risky and lose money in the long run. So I'm just kind of trading those and see what happens. All right. Okay, that's about it today. Woo! I'm yawning out here. It's time for me to go to bed. I'm so tired. I've been working like crazy. I'm scoping out my next option trades. I haven't seen one I really, really like yet. I'm waiting for that Apple call to run out. And then I'll see what I can put some money to work towards after that. When I come up with the idea, I'll make sure that I'll put it out here. I'll log it so you don't miss anything and I don't miss anything, and make sure I record my moves. All right. With that said, I think it's out. Man, I'm tired. It's time for me to peace out. So peace out.